Hello and welcome to the DIY Investing YouTube channel. We are working through every company in the S&P 500 and today is Borg Warner Incorporated, ticker BWA. Over the next few minutes, I'll discuss both my valuation for this company and my thoughts on its business quality. First up is auto components industry. They have a market cap of $9.3 billion and an EV of $12 billion. This suggests they're carrying some debt as well. So they provide auto components. So they provide solutions for combustion, hybrid, and electric vehicles worldwide. 4 segments: air management, propulsion and drivetrain, fuel injection, and aftermarket. Doesn't sound like a very high quality business off of those, but maybe it is. So they offer turbochargers, e-boosters, timing systems, emission systems, thermal system, gasoline injection. So these are relatively small components, but it seems like there's a lot of different components. They're only in a single industry. I wonder if they don't have much buying power because of the focus only in the automotive industry, but maybe they do. It depends upon how many competitors they have. So if we look at the return on invested capital, we can clearly see some cyclicality to this business. They have lost money in 2 of the last 20 years, which is not terrible. Lost money in 2002, lost money in 2008, almost lost money in 2009, but clearly the 2008 and 9 recession affected them dearly. Return on invested capital, pretty stable otherwise from 2003 to 2007, solidly in that 9-10% range. From 2010 up to about 2019, they're in that 10% range. They got a little bit higher at 14% in 2011 and 14% in 2018, but overall some cyclicality there. They've kind of declined in return on invested capital over the last decade, which isn't ideal. And for the last 2 years, 2020 and 2021, about 5% and 4%. However, COVID really hurt the auto industry, reducing sales massively. You have a lot of supply chain issues, so I'm not sure the last 2 years are really going to tell the full story, which is troublesome because it makes it hard to look in these 10-year CAGRs. Now, I don't like the clear cyclicality here, so that suggests it's a relatively average business and that it can earn reasonable returns on invested capital, 10% during good times, but it does have some bad years where it gets completely devastated. Gross profits are pretty low at 21%, so they don't have a lot of bargaining power, but they are generally stable, and that tends to be a positive in their camp. Now, what we do see is that their 10-year median returns on equity are 16%, which is very solid, and 10% for return on invested capital. Basically, they hit the minimum of what I'm looking for here. Now, on a valuation basis, it does look reasonable. They're priced like an average company. Their returns are like an average company. So 13.9, that's basically a PE of 14. Anything on 15 is below average. And so they have a below average price, which tends to be attractive here. Now, what I don't like here is that they're growing revenue at 7% while growing assets at 10.8%. That's going to show that they're going to have declining returns over time, which is exactly what we see when we look over the last decade. Now, this could be complicated a little bit because they've probably been severely impacted from COVID, if I had to guess, due to the supply chain, and that could be playing a big factor here. Although the other side of that is they see a big jump in revenue in 2021, a big jump in gross profit in 2021. So maybe they're actually a beneficiary over the last year due to the tight supply chain. Maybe they've been able to sell substantially more product than normal. So it's really hard to parse between that. Now, what we do see is basically EPS was $2 in 2012 and it was $2 in 2021. So they're basically flat. Now, they did double their earnings if you look at 2018 as your mark when they have that big piece, but they're not growing super fast. Maybe that's a 7% EPS growth, 10% EPS growth, not super fast. So okay, everything here is okay. If you're enjoying this video so far, hit that like button so more people can find it, and hit the subscribe button and ring the bell so you can get notifications as I upload new investing videos each and every week. Now, if we go to the income statement, we might learn a little bit more here. There's not a lot of other operating expenses besides SG&A and cost of goods sold. That really is the big driver. Again, you can see relatively low gross profits on this business. Net income, again, is relatively flat over the last decade, not super sustainable. You basically are earning $500 million. So it's kind of normalizing to somewhere in that, 20 times earnings range on their normalized amount here. Now, shares outstanding is, again, relatively flat. They've actually increased a little bit, so it looks like they decreased in earnings for the most part. It's actually not sustainable in any one way. Shares diluted was 243 at the beginning of the decade, and it's 240 now. So basically flat share dilution. I want to go to the cash flow statement, though. You can see that they're basically diluting shareholders every year with stock-based compensation of about $50 million, and they're buying back shares on a regular basis. But something's up here because they must be buying back shares at a relatively high price because you haven't seen any reduction in that share count over time. So that's not a great sign. When we go to the balance sheet, we can see PP&E has tripled. So you've tripled your assets on your plant, property, and equipment. And you've tripled your inventory, and yet your income is basically flat. And that's your big problem here, is you've been increasing the asset intensity of the business, so you don't have a lot of bargaining power there, clearly, to continue growing the bottom line. So for me, this is what an average business looks like. Borg Warner, average business. I don't buy average businesses. Despite it trading at a below average price, for me, it's both a pass and it won't hit my watch list. Thank you for listening. Please hit that like button and subscribe so you can get notified as I upload new videos on investing, individual stocks, and various ways to become a better investor.